Happy Friday, everyone. Starting early this morning at 7:57 a.m. Chicago time on Friday, the 10th of November, 2023. Thanks for joining me this morning. This is episode number 2572, almost at 2,600 episodes. Next, 18 sessions. With that being said, I want to remind you that I'll be traveling on leaving Sunday night, and I'll be traveling through Wednesday afternoon on business, going down to Medellin, as they say, Colombia. And I haven't been there before, and I expect that I should be able to do the Trader Bites in the morning, but the Trader Bites may be disrupted on Monday, Tuesday, and Wednesday. Just a heads up. We'll be back in business on Thursday if all goes well. This is episode number 2572, as I said, and derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we go. We've got our pre-market summary sheet this morning. Overall, the market's taking a bit of a pop here. Looks like Apple News this morning. I've been pulling up a chart of Apple here. Why have there not been any? Interesting. So a little bit of a pop there. There are no earnings to talk about yesterday afternoon. Allianz reported they beat slightly. This morning, news out of BlackRock. They're confident that the SEC is to approve their BTC ETF, making the investment in Bitcoin something that's accessible to many, many more people. We've been seeing a pop in crypto, and it continues. They expect it by January. This is definitely giving cryptos a boost. Jerome Powell yesterday during the IMF speech was quite hawkish. The market kind of responded to that. He made several remarks, and it was kind of a bit of a circus there during his speech, but made several remarks that the market has read as hawkish. However, the big drop at 12 Central, 1 Eastern, was the 30-year auction. The 30-year auction was very poor yesterday. If you recall, the auction before it was also quite poor, and the market responded to it. So we saw a drop across treasuries, across equities, just across the board. The market did not like what it saw. What Jay Powell said is that he is repeating that he is not confident that they've achieved sufficient restrictive stance. This is not what the market wants to hear. Again, he said that they're not confident that they've achieved a restrictive enough stance. If it becomes appropriate to tighten policy further, they will not hesitate. So this is a shot across the bow for the market, that the Fed will make a move if they need to. There was a $24 billion 30-year bond auction, came in at 4.769, tails by 5.3 basis points. The auction came in worse. The offering was worse. Very poor issue on a 30-year. This is very ominous news. I know that many don't follow what's going on with these auctions, but this, if they can't unload that duration, it just speaks to a market that is weaker. So that's what's in play. Yes, that's the biggest tail in a long time, over 5 basis points. It's pretty bad. Anyway, what else? China's ICBC Bank was hacked yesterday. They had some ransomware which shut their systems down, and that's a huge bank. It's a huge bank, and so it disrupted Treasury settlements. So we saw the effect of that as well. These are all things kind of happening under the rug. UK GDP this morning came in better than expected, and the big news, this week we talked from Monday onwards. We said that this week is likely to be just a pretty kind of a digestive week, and so it was. We rallied. We've gone sideways. We've been grinding in this extremely important area for the S&P at 4402. We've talked extensively about this all week. Next week, we do have CPI. We have a slew of numbers, and we expect the market to revalue itself based on that. At 9 o'clock right now, we have Fed's Bostic speaking, and then we get at 10 o'clock, we get the Michigan sentiment. Michigan sentiment at 10 is expected at 63.7. What we have to pay attention to on that release is the inflation component. Michigan sentiment's been falling since a peak of July. August came in at 69.5. September came in at 68.1. October expected at 63.8, or came in at 63.8, and now we're expecting November to be the prelim for November to 63.7. So just sentiment's falling there. We'll see how that plays out. Looking at the S&P multi-distribution profile, nice little pop here. It coincided with Apple's news that they are appealing the decision in Europe, restricting their, what was the decision? It was, or what are they appealing? That they're appealing the App Store's inclusion within EU dominance rules. Seeing a pop in Apple, saw a pop in the NASDAQ and in the ES. I'm not seeing anything else correlated with that. So that's that. The S&P multi-distribution profile this morning, 32% long inventory. Good range, finally, pre-open. Good volume, good range. 28.75 points. That gives us something to play with at the open. Let's take a look at what the conditions are this morning. So we had this sell-off yesterday. This is the drop right here. This is a point and figure chart, so you'll see a lot of overlapping bars because that's how P&F charts work. They're very good at showing where consolidation and balance, or balance and balance occurs. This is why I prefer them and Renko charts. But you can see right here is where the 30-year auction results come in and the market drops. If you look at the treasuries, you'll see this is occurring in tandem with the treasury futures. Market recovers a little bit. Nice little collision at the IB low on a revisit, and then from there we just run down on the close. The significant thing about the close is that we managed to move the point of control to the low end of the range, and we're closing in the lower quartile of the range, making this a qualified trend day down day type, which means that we are expecting price discovery to continue lower. However, if you recall, the top of the gap that we have just underneath this, I'll show you this on a TPO chart, is at 58.25, and we managed to move all the way down and to finish with pretty decent point of control at the low, and all we could get out of it was 4 points, which is very interesting. I anticipated that we would continue lower. In other words, the shorts are likely to continue to get paid in the overnight session, but it ended up flushing, coming back up. The NASDAQ put in a very weak low. It ended up two-ticking it and then having what's called a failed auction, running the opposite way. So the NASDAQ actually came all the way down to the prior low before running up. So that low is pretty secure for now. It looks like the overnight low is pretty secure. We've moved back to yesterday's mid and are holding there. And to me, it's just, it's pretty active. But what we have, the important thing we have here is a separation between where we are and the DGPs, the day generated prices. You can see the mid and the VWAP in the 67, 68 range. You can see the point of control is right on top of yesterday's settlement at 62, and there's a lot of difference between current prices and the overnight accepted prices. Granted, this is a multi-distribution profile here, so take that into account. But what this is saying is there's a kind of a disagreement in the overnight value, and we are opening in range. Let me ask you, is there value yesterday? Do we have value yesterday? This value, you can see the programs marked the value area as 43.94 and a quarter in volume, and 43.58 and a half. 58 and a quarter was the low, the high of the gap, or the low after the gap on the gap day. But is there value here? The answer is no. Just because my program does the math and selects a value area using an algorithm, it does not make it value. So we're opening in range, not in value, because there was no value yesterday because the market was in price discovery mode. Okay, so we have tested yesterday's low, which is highly expected, and then we put in a higher low, and we have broken the swing high in between. So this is relatively, quote unquote, bullish in the overnight session, but when you compare it to yesterday's trading, it is not. It is simply moving back toward balance. It's really just going back to balance. So you can see here, this is exactly what a reversal day would look like. Opening up top, not finding, opening above the range, not finding any buyers, coming back, being responsive, aggressive responsive. That open was an open test drive, or an open rejection reverse, or an open drive. In either case, yesterday you did not want to be on the long side. Did not want to be on the long side based on how it opened. And it had a range extension down. So we have the yellow bar you see there is the initial balance. We have range extension down. We took out the prior low, which ends the one-time framing up, this trend going up. So that moves the one-time framing from on the daily from one-time framing up to neutral. It's not down yet, to neutral. And then to cap it all off, the volume point of control is at the low end of the range. The time-based point of controls remained in balance. And so what we have is a market that has moved away from its acceptance. Those of you who are part of Convergent Trading's accelerator program, what did we say about the market closing below? Well, don't answer it, but you know what we said about the market closing away from the TPO point of control and the effect that most likely has, and that sets expectations for today. So given that we had a weak close, given that we only took out the prior low, 58 and a quarter by 4 points, and we're coming back in to this highly accepted area here, the expectation is the point of control yet again. So we're looking for 95 as a test today, right? So that's how things are shaping up. If we open and we are just very weak, in other words, we open, we try to go higher, but we get better rotations to the downside, then we're looking to lean against the open on a retest, open, opening swing low, VWAP, whatever you've got. For short, the expectation is a gap to settle trade back into 62, and then we expect the low to be vulnerable. If the low gets taken out, that puts us in a vacuum. Here. And so you got to watch the mid of that vacuum right? So the mid of the vacuum there is 47, is 47 or so. That gives us about the mid-century figure right there. And that would be the next target below the low, around 47. Just split the difference between the 58, 58 and a quarter and the 37.75. We expect the market to retest this, and then it just sets us up for one-time framing down. And as I've been saying all week, we have very weak structures. Look at the profile that's beneath us. Look at the gap that's beneath us. Look at the gap beneath that. Once we start to move to the downside, we have a lot to check. And so this could run a little bit of ways. I'm not advocating for a short bias because I don't know what the market's going to do today. But the fact is, all of those things that I just mentioned are playing together, including the break of the one-time framing up, the weak close, the potential for this trying to retest balance from below, the potential that it may not reattain balance. And if it doesn't, that's going to be our key clue as to what our bias should be, which would be short. And then we're looking for the market to expand rotations down to basically fall easily. And then at that point, we're looking for a test of settlement. We're looking for a test of yesterday's low. And then we're looking for 47 or so underneath. Do you see how this works? So that's what the auction is saying. So what this is, accelerate very fast, very accelerated move. Let's follow the points of control. You could see the point of control kind of flattening out. The point of control day before yesterday and the day before completely flat, and then the point of control shifts down. So you could see how it just makes a rounded top here. Boom, boom. Just follow the points of control, and you can see that it's being accepted lower. On a TPO basis, you have kind of a similar thing pushing, TPO. This is the problem with TPOs. They're just not as accurate. Very useful, but not as accurate. So the TPOs are holding to the upside, which makes a case for a market pushing higher. But on a volume basis, we've kind of made we're making a rounded top. The problem with volume profiling is it often gets ahead of the auction itself in terms when you compare days, when you compare tops being put in, and so on. It tends to get ahead a little bit. So that's that. Let's look at what we've got in terms of balance. So if I merge this back, yeah, sorry, I should have done this before. I don't need the visual usually. I can just imagine what the profile looks like. By the way, did you see that poll? I'd love for you to participate in the poll in the live chat about margins. I like doing these polls. It's interesting. I'm not doing them for any purpose. I'm not holding on to this information, but it's kind of interesting to get a census of everybody's opinions. Okay, so here's the multi-day. We've gapped up 58 and a quarter. We've gone all the way up to 44.0775, and here's this multi-day composite. Okay, the point of control for the composites up here, right where you expect it in the 95-96 region. The point of control for the volume point of control is up there at 96. The TPO point of control, though, is right here where we're opening today. So expecting a little bit of turbulence here. And then if we merge yesterday, which isn't a balanced day, but because it crossed the entire range, I'm going to merge it. It doesn't add too much. It just makes the composite a little fatter up top for TPOs, a little fatter at the bottom for volume. But overall, we are still in the bigger picture acceptance zone or balance zone. We have not fallen out. We don't expect to fall out immediately unless there's like really massive news. But what I'm saying is, as we fight our way back into balance, we expect that the market is going to try to reattain 96, but it may get stuck here at the 90 before it starts to rotate lower. The most recent auction shows that prices are being accepted lower. We did break that low yesterday, and we did break into the gap overnight. So those are kind of bearish inputs, so to speak, just to kind of have a heads up. I'm watching with suspicion, whereas I was watching with suspicion for any selling, I'm watching with suspicion any buying today as we come into the weekend. The weekend effect is in play. It is also Friday where we have options expiration. It is not the monthly options expiration, which is next Friday, but overall, that's what we've got. Now, while we're here, we haven't done this in a while. Let's see. You can go ahead and type in where you're located. Do not, and if you want to be contacted, please provide an Instagram, Twitter, Telegram handle. Do not provide an email or a phone number, but go ahead and pitch in and tell us where you are currently located. This also helps everybody see who's around them. Okay, I know several people have connected, several traders have connected as a result of this, and I love doing that. So do that. In the meantime, I'm going to look at the NASDAQ. The NASDAQ, same story. The NASDAQ didn't open in a gap, but the NASDAQ also finished a lot stronger, right? So the NQ is a little bit more unfazed. It continues to hold this balance zone here. The NASDAQ is expected to be quite choppy and turbulent today. Crude, remember what we said about crude, that I'm going to be very suspicious of pushes down from here, and I'm going to be expecting a push back up to 78.10. So that hasn't happened yesterday. It did manage to open, test higher, and finish weak. We saw everything get hit yesterday afternoon, but crude, left to its own devices, would have broken into this profile here and probably would have made it back today into the next the area expected. Crude, I'm suspicious of selling in crude, expecting this thing to break the inside day to the upside and start moving higher to retest. Remember, this 78.10 is the composite point of control. We fell out of balance. We're forming balance here, and I'm expecting it to come back and accept this and retest this big balance area at 78.10. And that's it. There's not much more I want to cover here. Good luck. Maybe I'll catch you Monday morning. Maybe not. We'll see. We'll see what happens. Good luck, and I'm glad to see where you're from. Take care. Hope everybody's safe and have a wonderful weekend. Take care.